The focus of today's show is our post view of the week ending July 16 and our preview of July 23rd and what we expect from a trading perspective for the week. We also cover the full FSD news as well as our usual sort of Tesla review 5 days prior to entering sort of the earnings arrival zone. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. If you'd like some helpful tips for trading and investing heading into an important period for Tesla, please join us on Patreon. I think you'll find the information provided helpful in your process of better trading and investing, and make a little money in the process is the goal. So the first thing I wanted to review is, well, what happened last week based on the numbers? So Tesla doesn't put out a lot of helpful data for one to work off of. And so we've taken to sort of go back through and look at the key numbers. So I'm going to stop right now. I hope you got a chance to see the chart we made up with sort of key numbers for the week that we tend to look at. In essence, within 100 points of where the stock is currently at or where we think it's going, we basically posted the call option numbers, both call and put, at different price points. For this week, we're kind of focused on the fact that, again, there are 33,000 puts at 600, and right now 27,000 calls at the 700 level. As you'll also know, as if you go through all of these, we also encourage you to sort of put a particular emphasis on the numbers that are 5,000 or greater in terms of options, and there are several of them in that space. The general term we're getting for this week, just like last week, is basically there are a ton of call options 650 and above. And the last couple of weeks have been very similar in nature. A lot of call options, very few put options, or fewer put options, even though there are a large number of them. Our assessment again this week is that there's a large number of institutions working to protect large portfolios. So that 33,000 puts at 600 is actually a very big number. It's bigger even than the 27,000 calls up at the 700 level. So it just feels as though everyone is being defensive, and we expect a very similar week. We had a pin on Friday, which caused a stock in that 637 to 640 range, and we're expecting this week to have a similar circumstance where Monday, if there isn't a sort of a market crash afoot, we see kind of a bump up in price nicely, and it sort of gets everybody's hopes up before we start seeing the clamps put on the whole thing by the market makers. Now, I have to say that I've been impressed by, there are a number of our viewers that have been watching and learning how to sort of invest and trade better against their ability to understand what the market makers are trying to do and then making money in the process. I'm reminded by one of my trading buddies who came up with a term called getting on the right side of the law. So that means if the market makers are allowing the stock to rise, you can make some money on that side. But if they decided to tank the stock, why not buy some puts and make some money on its way down as well? You know, the one question mark on this downward move of Tesla is often, well, wait a second, the stock has started dipping. Why don't I grab some now in case it pops up in the next few hours? And you've noticed that it'll tend to keep going. And the keep going tends to be associated with circumstances where there are large numbers of calls. For example, an important number that we talked about with our Patreon supporters heading out of the week was just the fact that 650 was really significant, and because Tesla didn't break 700 last week, we all of a sudden had the stock price not only hit 650 but keep going, because there are a lot of call owners right around that 650 number that would lose a lot of money, and the market makers would pick up cash at the same price point if the price kept on going. So the layout of last week lent itself to what we just described. And it's always interesting to watch how, if there's a large number of puts or calls, frankly, mostly calls over the last few weeks at a certain price point and the stock is close to it, there's seems to be about an 80% chance that the market makers will take every opportunity to wipe the stock out, forcing it below that number. So I developed this general analysis that you've been seeing starting about 20 years ago as a trader, and frankly, I thought it wouldn't work out. And the reason is that right now in the trading world, there are a lot of bots or robots that operate to sort of sniff the market and then look for trading opportunities that make money. I actually thought everything that I've been teaching for months now with how this all works, and even the last year, I actually thought it would sort of eventually be sort of discounted by the machines that are designed to use AI to control the trading and investing of the large funds. But the thing I find interesting about this is that when you can ride the data in any direction, I think it makes it harder to sort of sniff out a strategy, because the strategy described embraces a whole bunch of different possibilities that might be lurking there. And so I guess I'm pleasantly surprised. I want to also mention that we're actually developing an app to sort of deliver data quickly and help with your decision-making process. And wanted to encourage you to, again, drop us a note with your email address over at Teslafaninsight Facebook in a private message, because we're sort of forming a group where most of the things that I do now are 8 to 10, maybe 20 data points. The plan is to leverage the power of computing to do an app where we're leveraging in 50 to 100 points, maybe 200 data points to help shape on a daily basis trading and investing, to help you make better decisions based on a larger amount of data that's being sort of managed, manipulated on a daily basis. So again, let us know if that's of interest. So in general for this week, what we kind of are looking at is, a similar one to last week, a pop-up on Monday, driven by the fact that the pin is over for Friday. One of the pin comments that I'm sure you've heard before, but I'll mention it again, is just the fact that it costs money, time, and technique to actually pin a stock, Tesla or anybody else. And Tesla's a pretty big company, so you have to bring together a lot of elements to get it to work. 1 or 2 days, very easy. 3, 4, 5 days, a lot more challenging, and a lot more costly. And it's riskier because the market could move against you, and a lot of money could be lost in the process. So that's why it's my belief that we do get like a Monday, maybe even to a Tuesday, relief from some of the normal pin activities that we've seen a lot in the recent past. So, for the trading side of the week / investing, I think as the week closes out, there's going to be a lot of action regarding the calls for the following week, given that's when earnings are going to be announced. So I expect we're going to see a fairly heavy spike in the value of Tesla's options heading into the following week. And I think it's going to make for a lot of volatility for the stock as well. And I think a lot of money is going to be made there. So this is a great time if you've been trading or investing, if you've been selling covered calls or puts, to really, roll back and take some time to work your data, because I think there's going to be a lot of money made in the next 5 or 6 business days going into Tesla's earnings. So best of luck with that component of it. That's my view of how our week looks. The next thing I wanted to review is this 199 FSD. Now, as of a year ago, Tesla was having a 30% success rate converting buyers of new vehicles to paying the $10,000 for FSD, even though it hasn't been approved yet. And if that run rate was still going at that level of 30% of those buyers, I would say that the company would have been fine and things would just remain as they were. Clearly, as the average price of the car drops in terms of Model 3 or Model Y being purchased, it looks like there's a lot of consumers who are electing not to get FSD, and Tesla is sort of losing revenue in the process. And the change, I believe, for the 199 was designed to address this. Now, I think the idea generally is smart because, as you know, if you sign up, just like with the phone contracts, if you sign up for multiple years of 199, they can actually package, monetize that, and sell it into the marketplace and get all the money immediately. So introducing this 199 plan, I think, is generally smart. More money coming into Tesla that wasn't coming in previously. The next thing about this is I think they're kind of in a tough position because we just had the big announcement with a new version being released, and a number of people came back and said it's good, but it's not quite ready yet. And stuff like that is affecting the motivation of buyers at that $10,000 level. Hence, the interest level might be greater at 199. What I think is going to happen with it, well, I have a running joke with a friend of mine, this happened over multiple years. I'd meet a young lady that I was really attracted to and thought she was terrific. I'd call a buddy of mine and he'd say, "Hey, that's great that you met her, but call me back after it goes beyond the have nice dinners and say hello phase." And so he would do that, and I would say that my rate of conversion was probably sort of 1 in 4 or 1 in 5. So that get excited was not happening until there was certain progress made after this went down a few times over a few months. And when it comes to Tesla, I'm amazed at the number of people who are kind of jazzed out of the box on certain issues. So it could be Battery Day was happening. There's a number of things that have happened over the recent past. And so the challenge I'm seeing here is that, yes, there is excitement about what's going on with FSD. I don't think it's bad, but I really think what's going to happen is people who would have put up the whole 10 grand will now step back and say, well, I'll just do the subscription instead. And that works fine for the company. But the fact that they're making this change, in my mind, suggests that there's a declining number of people who are going for this payment, and therefore it might be affecting the profitability of each car sold. I suppose it'd be a lot more interesting to see them blend it with some kind of supercharging prepay. That way, you're definitely going to be doing some supercharging, and if that was blended in some way with FSD payments, I think that would actually be a lot more compelling, or even something like you can prepay a certain block of usage that you can use over time. I think something like that would be very interesting because just like gym memberships, there are a lot of people who are trying to buy that gym membership, but they don't go very often and end up paying the full fee. That's kind of what's been happening with the current FSD, but I think that consumers have kind of gotten savvy on that, and that's why we've seen this transition. So I hope it works, but I think that's my assessment about what's going to happen with it. So I think that I'm going to go ahead and end the show today and just point out that I think this is a huge week for Tesla heading into earnings. This is a time when analysts usually do their upgrades because the company usually is in a quiet period where they can't announce anything significant like FSD within 2 weeks of earnings announcements. So I thought it was strange that this new information kind of rolled out and is potentially impactful on the stock, and it's being allowed is kind of interesting, strange to me. Any rate, just a reminder, please take time to like and subscribe. We also want to encourage you to join us on Patreon for better quality information for investing and trading. We also wanted to note we have a few SpaceX shares. If there's interest, please hit us with a note on Facebook in the private message area. Next, we'd like to move on to our health tips. As usual, don't forget have a salad if you're going to do lovemaking as a way to reduce the potential impact of all the blood flow being to your stomach for that large meal rather than other extremities. We also wanted to encourage you to, as a reminder, don't go to bed within 4 hours of eating, minimum 2, to allow the food to digest before you go to bed as a way to avoid acid reflux or some of the other consequences of this. We have a list of other recommendations that are health focused below, and would encourage you to check those out as well. And I think you'll find them useful, particularly the 25 leg lifts per leg every day with a 5-pound weight as a way to strengthen your quad muscles to support knee health, if you will. So, any rate, this is Greg for Teslafaninsight. Tschüss German, au revoir French, Lehit Road Hebrew, Hoda Hafez Farsi, Zdravstvuyte Russian, Ni hao ma, Chinese, Konbanwa, Japanese, Hey do Swedish, good day our friends in Australia, and in Jamaica we say, Nuff respect, walk good man. Thanks for joining us, have a great day, and bye for now.